Y'all couldn't see anything yet. Good job. Good morning. There we go. What's up, you guys? Good morning. All right. Let's just jump right into it. Market's opening irrational, looks like, to the upside. A good sign. We like to see that. Let's see bull market kind of surface itself higher. Opening. So let's just get my charts here front and center. I'm still on my laptop. I'm still on vacation. So give me 1 second. We're going to be able to wonder. All right, how are you guys doing today? Going to get set up here for the first. I have another monitor here, so I'll make things a little bit easier. Okay, so let's get Rocket Scooter front and center. Let's take a look at the. Okay, right out the door, SPY. We have a new version today. We're going to talk about the different things that are coming with the new version. Should get everything loaded up. We should have all our new scanner settings. Everything should be up and available today. Indicators, looks like you have to add your indicators back on here. Okay, let's refresh. So if anything's not working, they just loaded a new version today. Go to tech support in the Discord and make sure you go in there and publish it there. Let me double check to make sure everything's coming through. So nothing's come through yet. We're gonna watch these numbers right here, and as soon as they start to show signs of life, that means we got the data coming through. Yeah. We are checking into this right now. Thank you guys for your reports here. So I'll keep an eye out on this, especially looking at it. So whenever this morning we have a really nice new version coming through. Market looks to be nice and irrational. So far so good, even without MHP. You can see that we do have today's walls and hedge pressure coming through. No MHP. So let's just double check that we have that data. Let me run it on single mode here for monthly. That would be the mode version. It might be Austin's probably a bug between the two different modes for settings, single mode and monthly mode, because they did add that second mode. So I bet you that's where the bug is if you want to direct them really quick. Does that make sense? Because what used to be called single date feeds that MHP, they need to make sure they grab it from monthly mode. That was that tie-in, you know what I'm talking about? So we will have a different mode on the function side, also liquidity map as well. So single date, these are all here. So just double check with them that they have it. It's probably it's just self-referencing inside the database. Cool. Okay, look, market nice and irrational. Liquidity mapped positive. Looks like it's a long up. So if you only have this on the long up side, 361 is bull side, 62.5 is the bear side. We can do single date with 1021. Let's see if we get any walls. And it looks like there's something with the dates in the database not pulling something. Let's see if I do 1021 manually as well. Let's do 1028 first. So nothing received there. Let's do 1026. Nothing received. 1024. Okay. So it seems to be something with. Okay. All right. So the best we can with what we got. Okay. Everybody, put your date on auto. Put your date on daily, and you're not going to have monthly. There was a time we did have monthly. So the difference between the two is just knowing that we are likely above MHP, which is a pretty decent sign. We are a long up. If we were to do the other side of the coin, let me get the playbook front and center. If we were actually bull long down or bull long up, let's look at the two different cases just to see how awesome traders we are, and try to see if we can't make some heads or tails out of both sides, because we don't have MHP yet until it comes in. Let's see, bull long up and bull long down, both are exactly the same, with the exception of MHP break is a push higher towards open, and between blue and yellow, it's a dip to yellow and a return to blue. So in any case, right, your options are, if MHP is down here, then it doesn't matter. You're bull long up, right? So you're not going to interact with it before any other stop loss. So today, the way that we're going to do it, I love doing this because it's like a challenge, right? So if you're going to write something down today, let me get my pen here. Do I not have my pens drawn? Oh, maybe I don't. So here, right? Remember, bull long up is going to have a stop below blue or below yellow. So yellow could be up in here somewhere. We don't know. So let's take the assumption that yellow is down in here. Stop would be right at the bear zone anyways. So breaking through at 360 would basically be right, be stopping on any longs if it was long. Right here, BLD is the same thing, 62 to 61. Would be any downside before upside. So let's just assume that MHP is somewhere down in here, and we'll get those numbers coming through. So we'll fill you guys in as soon as we get any information. But until then, let's go over new features of the platform after we go through targets today. So SPY is a bull long something. QQQ is a, and we have new, I guess, patch notes should be out as well, and I'll go over those. I'm just looking at everything. That is very lovely to see. Oh, thank you very much, Austin. The awesome patch notes. Okay, cool. QQQ, very similar setup. Except for it's a short. No, actually, sorry, very different setup. QQQ is a short down. Let me say bear short. So in this particular case, there's a resistance here at 270. So I guess today all eyes are going to be on, and let me put zones here. I'm sorry, resilience. Let's do both of them. Keep an eye out on both of the resiliences. You're going to have a 270 on QQQ. Now, any break of 270, there is an immediate liquidity pocket right here into the zone. So, it's going to be a sluggish move. The way this is distributed is not going to allow the market easily to rally straight up. I'd be looking at 270 to be a first step resistance today. So until that liquidity map information comes through, once our team is looking into that, we'll be able to run the scanner and take a look at some of the other settings to go with it. For now, keep an eyeball on the two things that do actually matter. Resilience. You have NASDAQ is a little bit worse than the S&P. So today, NASDAQ has some move in between here. It looks like we opened up, hit that resistance. Any downside that interacts with half gap, we're going to make sure that this stays above zero. If that white line goes below zero, then this is resistance to fill the gap this way. So all things are pretty decent. This open is really nice. We opened irrational to the upside, which is going to show that the market's going to be probably not easy to predict. Your indicators are going to be all over the place today. Not ours, like technical indicators, trend indicators, things like that, are going to have a harder time predicting or leading whatever it is you're looking at, because the market is completely irrational, which is great. It's always great when you're rational to the upside. That's something you do want to see in a bull market. So we'll see if we get that reversal going into the end of the I guess first hour of trading. That 270 on QQQ is very close to this 11,100 on NASDAQ futures. So keeping an eyeball on that is going to be very important. So let's look at these upsides just in case we keep moving. I'm going to give you some upside targets. We talked about red lines the other day. We talked about yellow lines. We talked about the catalyst right here, the non-farms down here, market dropped. We had the catalyst this day, which was the unemployment numbers and the inflation numbers. The market is moving off of that. So clearly an impact line to interact with would be this 37.48 if you keep going higher. Also to take note is we need to do some yellow line calcs, which I think we've already interacted with it there. Yep, we have. I'm going to double check the bot just to make sure the bot has not shown any changes in yellow. We are exactly the same as last time. Cool. Excellent. Okay. Give me 2 seconds, you guys. I'm going to post our stream over. Do me a favor, while you can, everyone sit here, go down, to the bottom of this little video here, click that like button. That's always important. Do it now, so Daddy don't get angry. Let me see if we have that. If we're doing any space this morning. One moment. No spaces today. Or I love spaces, but I am not prepared today. To multitask. Welcome, you guys. If your first time here, feel free to leave a comment in the chat feed right now and say, hey, what's up? It's my first time here. We have a special gift we can give you your first time here. The gift is, I'll just tell you you're awesome. That's always helpful. Let me get it here. It's not a real gift. Maybe we'll come up with something later. We need, I realized out here in Colorado is I only brought, I'll tell you guys a funny story. Let me finish posting really quick, and then y'all will love this. Okay. Social media post here. Done. First thing you did. Love you guys. Thank you guys. Message retracted. That's okay. There was a new release this morning, and they had looks like the data feeds are disconnected for a hot moment, so they're gonna look into it. Don't ever fear. Just hang tight. We'll walk you guys through it. You're gonna look for the data that we do have. So what happened is something with the dates. It's just a release bug since we released a brand new version with a ton of features. Look at your strategies, guys. Look at that. Look at your parameters, guys. Look at that. We have massively upgraded the platform. Tons of new stuff. Now, we are missing MHP, which is preventing a liquidity map from showing the letters. We're going to do the best that we can with what we have. So just to show that everybody's here, what I'm trying to do is get everybody here now. So y'all help me retweet, repost for the next 5 or 10 minutes. Hang tight while I do all the posts to get everyone here, because I want to tell everybody all at once about the new stuff and then what we can do. So for now, I'll just keep an eye on 270 on NASDAQ. That's the only thing that's showing that we have resistance. And then in here is 272. So markets are rational anyways. There is no playbook anyways, technically by the rules of markets are rational. It's kind of a good thing to have that at the same time. We have open outside of the risk interval bands today. So that's one of the things to note, that we have moved at least 100 points today in S&P futures, which is really good, at least if you're on the bull side of the market like me. So the market just has this irrational side to it. We wouldn't be too heavy involved in betting on big playbooks anyways, the way that I trade. So right now I'm looking at the clues that I do have, and the clues are as follows. I'm repeating what we said this morning. As we put SPY front and center. SPY is a long up, right? So until we get those MHP calcs come in, as soon as they reference that date, you're going to see that we are long up at 362. So wherever MHP is going to be, we don't really know. But both bull long up and bull long down have this similar playbook regardless of where MHP would be. So they both have support at blue and they both have support at bull zone. The major difference between the two being that BLD has a little bit more of a downside potential if you are below MHP. So if MHP is anywhere up here when we get those numbers come through. So these resilience numbers that are saying 0 means we have 0% of the monthly hedge pressures come through the count. That's how we know it's a date malfunction. Now the reason it's off is because they've added new date modes. So there's a third mode that we didn't have before, which you'll see, and with the new addition, probably something got clipped. So right here, BLU, BLD, both of them supported blue. So both of them looking to do something like this, and resilience also to go with it. It's both really strong. It's 28 on NQ and it's about 90 or 80 on SP. Hold on 1 second. So I'm going to assume that it's probably down here somewhere, but either case, putting 360.8 as support because resilience is greater than 0, and 362 as support, resilience is greater than 0. Even without monthly, the market is, to me, stable inside of that range there. So having something long at the open with a chance to buy a dip here with an X below there for me to stop out is the ideal setup. Now with QQQ, it's touching hedge pressure at 270. So it is a bear short, either up or down. So going through both cases right now, bear short down and bear short up. It's a similar to a bull long up and bull long down, and that Nasdaq has a downward pressure. So Nasdaq has a resistance at 270. Bear short down being the more bearish of the two, right? All things are down, which we don't know. But both cases, Nasdaq does have resistance at 270. So maybe you're looking out today with a clue. The market's gapping up and hitting that 270 resistance, and it's likely to pull back in this environment we're in if we check the VIX. So if it's going to pull back, where does it pull back to? Well, either to MHP, which we don't have yet, or it pulls back down to the open, which is that bounce right there. So today, where we open right here, 270 to there is that downside. So we can, by proxy, consider both the S&P by putting these two charts side by side. If this falls below the open price today on QQQ, then both SPY and QQQ are going to pull back. See, even without, what's neat about being rehearsed at reading your maps every morning is that even without monthly hedge pressure, I've already figured it all out. So today, Nasdaq being the weaker of the two, and Nasdaq with the short down. Does everybody see that? Thank you guys. What's up, Jordan? Appreciate it. 270 resistance to the open. Anytime you fall below the open price, the market tends to sell off, as you see right here. The short down, anytime you fall below the open, it's pretty bad, and you will be interacting with half gap at that point. So today, a gap and go long on the upside with any stop below that on both S&P and QQQ is the way to go. So inside of here, to bet on a hedge pressure break, the small position, any resistance at 270, a day trade scalps to there. With resilience nice and strong, it's possible it falls there, but so these are the pathways from 270 to 263. There's going to be support at the open, and it's going to try to push to go higher at 270 likely because it's irrational. So I won't bet on the massive reversal because we're still going into major earnings next couple of weeks, but at least where we are now, it's a decent attempt at another breakout day. So we had two options. I was going to show you both of them on what I thought was going to happen. So we either have a down week and then an up week. So this nice red week we had, right, where you had this just kind of very high stems on both sides of the body of the candle. Typically when you have a red one like that, the next week likes to confirm that you don't find lower lows before it reverses, or you have that red candle and you just keep going. So usually when you have those wicks, right, you don't normally have a red candle that reverses so sharply. Normally you have that red lower consolidation test for another week or two. And again, that's empirical. There's no real reason to kind of assume that something in the past, especially technicals, dictates something they have some future. So today, taking a look at what numbers we do have for UVXY, let's run the chart here. Yes, everybody make sure you click that like button. We also, maybe we can do this today, We're releasing, so I was telling everybody in members chat today, right? We're releasing 2 types of content now. So the idea is we have a bunch of educational videos. If you guys want to do me a favor, actually, do yourselves a favor, go to the rocketscooter.com website and sign up for the free trial. You can actually complete the platform for free and look at everything that we're looking at. So go there first, sign up for that, and then let's chat. So we have a bunch of videos that we've made over all the techniques that we do here. And the videos are, ranging from years old to like many years old. Even before we had the platform, a lot of videos are there. And a lot of our techniques have hours and hours and hours of videos covering them, which is a good thing. It's a really good thing to have as much information as you want. It's also a bad thing when you're getting started because it's really hard to kind of, thumb through hours of videos for each particular topic to get such a deep dive study when you just want to kind of open the box and see what you can play with, right? And then ease into different ones, add little bursts, and then as you learn deeper, and then learn deeper as you go. So we're restructuring all that content in a way. The idea is that instead of, 1 3-hour video on all the different variabilities, red lines, yada yada, we can do like a 10-minute intro, a 10-minute application, a 10-minute harder application, like another 10-minute very hard application, like a little burst of different cases. And then maybe a separate hour-long video over the function, the functionality, the history, or even the method that goes into it. So ideally is that, you can be exposed to how much you want as far as the member goes. So the new content that we have now that we're planning is going to take the live streams that we do, and, they're going to be 3 hours long, give or take. We're going to clip out any trades that I do and be like a 5 to 10 minute trade recap. And we're going to come back and republish that because everybody says, what trades did you do is most important. People want to see that. And what educational topics did you talk about in the stream? So we'll be doing a kind of a recap every day of whatever it is we're broadcasting and publishing that later. So you don't have to thumb through a 3-hour stream. Both of those types of content will be very helpful to you guys. If y'all want to see the whole days or the stream, you wind down off work, or you just come in like, what did Matt do or talk about today? We'll be releasing that kind of content there. And also the educational stuff. We'll be doing different topics every day and recording them and releasing them. So we ask you guys to do us a favor, and do yourselves a favor as well, is go down to all the new videos we make. Give them some love as well. The video that we made over the weekend is a condensed version of our most arguably our best video that we've ever made, right there. The full-length version is in our Discord. That is the condensed reference version that just gives you the information that you want. So that'll be, we're kind of testing out the format. So you guys all go there, check out that video, watch the whole thing. It's really short. And then, you have reference. The video will talk about the 4 different techniques, right? And then each of the techniques in there will be referencing, something that you can learn further from your membership. So if you like the format, let me know. If you don't like the format, we can always change it up. But I think it's a good way to get everybody satisfied and happy on the different things that we have here. So go to rocketscooter.com, check out that free trial first. Second, check out our latest video. Go watch it, like it, comment, whatever. We'd appreciate that. And let us know your feedback as we continue to make more stuff for you guys. I'm going to double check in with what's going on today on the S&P. Still, things are pretty decent here. I like that. You guys should just focus on the stability of the platform, so adding stuff all the time. Platform is very stable, by the way. Platform is absolutely stable. Never made the comment. There's no problems with it. Just when you release something live, sometimes you occasionally get something clipped. It happens. But the way to work around it is to know enough, like I did, to still make a trade plan, even with one tiny data point missing. The majority of the trade plans here are going to be dependent on this breakout area and this support area. So we're SPY open and we're NASDAQ resisted. That's your breakout range. So if it goes either way, that's it. So sometimes when we release a new version of the platform, we will not have, you can't test everything live when the market's closed. Clearly pulling resilience and data for resilience when market's closed. You can't really do that. So Yeah. So if you're just tuning in, we are waiting for our there's a date. It looks like there's a bug with the dates that changed over the release. So we released a brand new feature, a brand new version today with new features, and looks like with the new modes and the new dates functionality, we are not pulling monthly hedge, which is the only thing that's missing today. So we're going to look into that. But let's go over new features while we're looking into this. Yeah. This is version 2.3.0. Very awesome. So I'll walk you guys through each of the new things. And also when market opens irrationally to the upside, the rule is we don't even use playbook anymore anyway. So even today, there is a kind of like a luck of the draw on this one, in that, we're not supposed to bet on anything making sense anyways, because the market is also irrational as well. With that being said, this is your breakout range. Everybody understands today, so make sure y'all communicate that in chat. Somebody also go into chat and just kind of answer that question. Say, without MHP, somebody can write that for me in the Discord. Just say, without MHP, you're looking for that QQQ resistance, right? Being the upside resistance. And we're going to buy proxy, put them side by side. We're going to use QQQ as the resistance today at 270. And then the opening price is support. Keeping a monitor on resilience, making sure that stays positive. So if resilience stays negative, we're going to tank through, open, and fall down. So today, the call is, on my end, long. Longing for a 270 break, but you see how the market's kind of sandwiched in a 30-point range on Qs. So it's in the middle. The open price acts as support. You're still limited by that short down off of 270 there. Yeah, so as we keep saying, if you don't have if something's fudgy in the dates, it's a display issue. Now, you can always go to the old Rocket Scooter app, and you can still come through here and see if we have anything. But it does look like, in general, there seems to be a data outage from our data providers. As I look into this, we have no data being pulled right here on these particular dates in general. So it looks like our data providers might likely be down, or something might be funky on their end. So it's not our app that's having issues today. Our data providers are saying it's nothing for that date. So that's something to look into. Okay. One second. Writing emails and that. Okay. I'm excited to see the market flip around bullish. That's kind of dope. It's really nice to see that we are getting a little bit of love here on the bull side. All right, so looking at 270 break, any upside from here, there's a liquidity pocket right at 272. So the market is probably going to likely push itself higher. I was very excited to see there being a reversal last week. We had a sell-off on Friday. Basically, just that was how expiration was treating everybody's options. A 270 break on QQQ is we're going to treat that like it's a bull long up and a breakout. There's unlimited potential for the market to move higher. Now today, I'm going to be looking at 270, 278. I love looking at the spam. Looking at the spam bots. The best adult dating site. Super cool. Hubba hubba. So I'm pretty bullish for till the end of the year. That's kind of where my attitude is, that the market is going to respond very favorably to any negative news. Any negative news is a better sign that Powell and the team will not be so aggressive on their policies, and decent news or good news on economic data as far as jobs market goes, which is the most important metric, is going to be perceived as license for the Fed to continue to stay very hawkish. So one of the first people, you might hear a lot of people these days talking about kind of the inverse correlation of how the market's moving relative to how the data is coming out for inflation as well as the jobs market. We've been talking about that for months. We made a video called Bad News is Good News and Good News is Bad News. And I think right now, the remainder of Wall Street, that's, as we've been saying it for a couple months, it seems to be one of the hotter topics is that, the news is now finally, and others are starting to now finally pick up on that sentiment that you are seeing it behave backwards. So just like usual, we're usually the first with an idea in many instances, and the videos are on our Discord. If you guys want to see them, they actually went on this called Bad News is Good News from probably a month or so ago. You guys are ready to welcome to take a look at that. Again, the correlation was pretty there in front of your face for the unemployment filings over the last year. You see that every time that we saw that seasonal unemployment tick up, you started to see the market rally when unemployment was looking a little sketch, right? People were looking, or jobs market was looking a little shaky. Shorts would squeeze. The first round is a big short squeeze. The second round was a nice round of long buying. So why are people responding positively to negative jobs data? It's because the market has all eyes on the Fed. That's all that matters right now is the Fed. The only thing that reverses a bear market in QT or in a period of rate hikes has always been rate cuts. So until you get that rate cut, you can kiss your bull hopes and all-time highs hopes goodbye. So right now you need to bet or find a way to make inferences of, hold on one second. So what you need to do is take a look at that video, and it'll walk you through some of those metrics that we look at. And then after you do that, you'll see that really the only thing that is pivoting the market and reversing the market is practically bad jobs data or inflation. Now, again, if inflation starts to come down, that is expected right now. Inflation shouldn't be getting much worse. There's no mechanic for inflation getting worse, with the exception of, other than the noise of it, slowly kind of tapering. You're going to see, as long as the jobs market is stable, inflation is going to continue to show lower numbers. So the jobs market ticks up, inflation is going to tick up, but that's not even perceived medium-term or short-term bearish. It's longer-term bearish, or a reflection of a longer-term bear economy, because you will see those effects when production is low. You'll see scarcity and then prices go up. But in this mode, we're recovering from the whole COVID thing. So we're still in that boat that people are just listening to the Fed. And Wall Street has that ability to forecast Fed a little bit better. If you have that understanding that Jay Powell's going to drive the bus as fast as he can until the steering wheel starts to shake. And the only thing that's going to shake the steering wheel and kind of scare him out of his policy would be the potential for affecting the jobs market in a way that people get laid off because stock markets crash, and people get laid off because companies performances are down or sales are down or whatever because the economy is bad. Right now, the economy is still really good, and it's in a really good state. Uh, People aren't getting fired in massive waves who actually are doing a job. People are typically getting fired in this moment in time or laid off in this moment in time are going to be your kind of work from home types that aren't really needed at the time, where the companies are trying to improve their bottom line. They're probably going to trim 5 or 10% from the bottom, which is always a good sign to free up some cash. And free cash flow is always good for improvements or just less expenses on the company's overhead. So, it's perceived as a bullish thing when people lose their jobs as well in the very short or medium term, not only because it can forecast a potential Fed less aggressive rate hike, but it also can forecast next quarter earnings. Companies might be able to give a little bit of a boost on their production due to the efficiency gain or just the more cash they have to debottleneck whatever it is that could be causing their sales to be down. So either case, we're still in that slow roll recovery from COVID, and inflation's coming down, which I think is good. So only metric that matters is jobs market. I said it months ago. Now everybody's saying it now, and like always, you only try to be first. And my pinned tweet is: the market was crashing, everybody was Chicken Little. I called it 2-month bottom, and literally from that day, the market bottomed up, and Papa Bear made a fortune on the way up. So let's see if we can't repeat that going into the end of the year. I am calling a rally till the end of the year, so we'll see if I'm right or wrong. I don't think we're going to find lower lows whatsoever until after January 1st. So let's see if I was right. I did say that last week. Were you all here when I said that last week? Remember? Give you all support and love and fat yes in chat if y'all remember Daddy saying likely we're going to reverse and rally till the end of the year. My buddy Money Matt, who's a friend of mine as well, came out to a party we had recently, and him and I were hovering over some sliders, having a chit chat about the same thing. And he also was in the same boat, which I thought was great. That one of my friends also had the same sentiment that we were likely going to not just squeeze, but rally hard. There's going to be a buying spree on the commitment of traders should show the longs inheriting more shares going until the end of the year, just because the market isn't going to go down that fast. And earnings should come through slightly better, as we've had a couple of waves of unemployment where unemployment raises or unemployment filings where companies have had the ability to, trim their fat. So I'm gambling that this earnings season is going to come out hella stellar, right? So I think this earnings season is going to be really good. So I think that we're gonna have probably a slow float or volatile move towards some of your major techs and some of the other big stocks. And then earnings are going to be a mixed bag. But I think overall, we're not going to find lower lows in that mixed bag, as banking has proved to be a good sign of that. And banking being one of the most sensitive sectors to rate hikes in QT, banking didn't necessarily shit the bed. So I'm going to expect that the rest of the market might also be in a decent spot. So going forward, what that means is you can get large periods of window dressing towards the end of Q4 where people want to make sure as they get their stocks on the books before the end of the year for all kinds of reasons, whether it's for, showing window dressing as a thing where a fund will put stocks on their books like the day before they report to their prospectus and clients and say, oh yeah, the fund has always had Apple stock in it this quarter. Well, if you bought it on the last possible day, you can technically say that. It's a black hat practice. This is frowned upon, but a lot of funds and firms do that. You might see a lot of a lot of people want to get on the books in the last minute for ex dividend or whatever the case may be. The market's not going down, and you just want to plant some cash in and not be the only person on the street or your buddies that go to lunch that didn't buy anything. You just want to get something on the books just in case. You might see a lot of that, or a lot of shorts taking profit going into the year, or to some tax loss type selling. A lot of end of year mechanics in a bear market you can see that can rally the market till the end of the year and rally it into the first month or so. And then it would probably be around Q1 earnings where the market stops going higher, and then we start to see the effects of QT work the way of the economy, and all that unemployment uptick turns into being the bad sign of the market, where the slower pull down actually starts making those things bearish. In the short to medium term, people losing their jobs is provably bullish for the market as Wall Street has responded. The two largest bull waves we've had have supplemented upticks in that unemployment filing. So AMD is just pushing a little higher, which is decent to see. I don't think I have a playbook here, so I don't really know what numbers they have, but we're gonna wing it today. But yeah, market's nice and decent to the upside. So really no reason to believe that there's going to be any sell-off this week. Okay, we do have something we're looking at here. Austin, I'm going to drop something in the team chat for you. This is for Amjad's question from last night. Is music playing? I can't even hear it. Put that music playing. Oh, here it is. Yes, unfortunately, with our new version of the app out, we're not going to have all the data come through. But I think everything's going to be very good today. All signs look great. There's no signs of market selling. I'm going to say that the data I am looking at is all positive for my thesis of bad news is good news. Let's pull the economic calendar to the front and center. Take a look at this guy here. Going back to last week. Let's go back to... If that music's really loud, y'all let me know, because I don't know how loud it sounds to y'all relative to my handsome sounding voice. So going back to, let me pull the calendar up and let's look at last week's report. Let's go back to Friday. Apply. So initial jobless claims is a neat thing that I want you guys to take a look at. When we talk about this one, this will just kind of reiterate some of that thesis. So in the beginning of January, right, or December to January, there was an uptick for maybe like 2 months. This data point comes out weekly, the jobless claims. It's the first time people file for unemployment that week. So all the unemployment data, it's got the most granularity. It means most data points, the more frequent data points. So like the big unemployment number, comes out once a month, and non-farm, same scale. So getting something once a week, even though it's noisy, in general, seeing that trend up is what we've been seeing the market respond to. There was a wave up in that kind of early January for a couple months, and then from right towards like the end of May, when it kind of confirmed going higher, up until the middle of July, there was also an uptick. So people were, seasonally losing jobs and things like that. But in those two waves up, you did see the market rally in 2 waves as well. And again, that supports the thing that we've been saying about the jobs market being the only thing that's going to hint that the Fed is going to possibly taper off in their hawkish stance. If you have any questions about that, you guys let me know. If I pull up a single chart on S&P, we'll kind of pull that guy up here. Let's do SPX during that time. Nice clean chart here. And so I think everything's going to rally up today, tomorrow, and through the week. Couple things. All right, let's kind of just showcase. Actually, let's do ES futures today. Oh, I have this like no copyright sound playlist going on. The stream has that Twitch sound to it. I like all the no copyright EDM artists. They're all really good. Okay, daily chart. It's like a specific sound. A lot. It's like all those artists like Tobu and Heinkick and all them. Some good jams. Okay, let me put this here. All right. So if you go back on futures, this is the S&P futures, right? Normally when you see, and let's do a weekly chart. This one's list. I'll show you guys a couple of things. These trends are really cool, and then we'll just call it a day. And I'll go figure out what's going on with the monthly data. Our techs are looking into it. It's a little bit more of a bigger issue than I mean, sorry, it's not that big of an issue. We're just missing. I think there's a date error on some of the automatic pulls. So we're going to try to reference that and see what's going on. We'll let you guys know when we get a feedback on this guy. So if you look at the daily chart, right, we have been pulling back. I did say this is the bottom. Typically, if you empirically now, that doesn't really matter as far as creating a trend, but Wall Street does like to behave against what they've seen before. And there's two kind of, I guess, laws that aren't written in any law book that everyone follows. And number one is you don't leave a recession until the Fed starts cutting rates. That is how Wall Street's behaving. They will not do that because they don't expect anyone else to. There's no mechanism, or not a recession, a stock market, bear market. Let me start with it. Recessions end on different mechanics. I misspoke. Bear markets don't end until Fed starts cutting rates. They don't. And they may even forecast cutting rates by less aggressive rate hikes. We're doing 3/4 of a basis point. So we have to come down to 1/2 and 1/4. You'll see Wall Street very bullish on that news as well. So the second rule, which is really nice, is that so the first one is that you don't get bull market again until Fed cuts rates. The second rule is that there are no surprises with the Fed. If you guys write this down, you're going to learn a whole lot from me today. They say exactly what they want you to hear because they say exactly what they need to say. The script is literally probably the most rehearsed script ever written because everything Jay Powell says, any minute he's in front of a microphone, there are computers and robots listening to him, parsing every word he says, and there are people that pay infinite amounts of money to have that data analyzed as quick as possible to make this decision, meaning that he's not going to come out and say something that's not going to direct the market in the direction he wants it to go. So when you're listening to him talking, you have to know that that script is designed to tell the market exactly what they want. If that script has words in it that makes the market volatile, it's because they want that behavior. They're not out there talking at press conference for any reason other than to create the market response or to buffer that volatility if that's what they're going to create. So just keep in mind that there's you can get a PhD in a field of study on FOMC script writing. I promise there is some kind of science to that thing because it's very predictable what they're going to say. As a matter of fact, before that FOMC, I always create a list of talking points relative to what I think is going to happen. We usually nail what they talk about, and it's been the same. We said they were going to focus heavily on the job market and jobs data, and they have, right? Because that is the sign of what caused the inflation to begin with. And so that's all eyes are on that. And so anytime they say anything that's drastically different than what's predictable, and this is the cool role to take with you, is it's meaningful to create a response. I mean, anything they want to do right now is not create volatility in the market during QT. That is one thing for sure. Because if they create volatility, they shoot themselves in the foot and may have to bail us out at a worse spot as opposed to carry liquidity at the top. So QT, the idea is that Fed is putting liquidity responsibilities onto us, meaning that they're selling at the top, right? It's basically what's happening. Can the market sustain that here? And absolutely we can. We've shown that. We've had a year and the market's really not crashed. So it's going to take a while for the market to crash out. There's really no mechanics to show a market crash or even to break COVID lows or even to fall below here, at least until next year. So I believe that we have free reign to rally and even double top before the summer. before there is a bigger mechanic that we see what the effect of fundamentals on the economy is. It's all about timing. You traded long enough, you know that there are three different perceptions of bad jobs data, especially in a period of rate hikes. When you have inflation and high unemployment, it's called stagflation. That is a market crash you can't recover from. That's the thing you don't want. So anything they do that threatens the jobs market, they will undo very rapidly, because the bailout at the bottom during stagflation is 1,000 times worse, and they'll be the only liquidity provider with nobody working and investing in their 401ks, nobody buying stocks, period. They'd be the only buyer, period. Even banks will collapse, right? And there's no market makers, right? So you're talking about a crash we won't be able to recover from. The Fed is certainly not going to drive us to zero, right? So you have to know that. Am I expecting a rally to begin after November 4th? No, I'm expecting the rally to begin last Thursday. So the Monday that week, I made a kind of little prediction that if we had either flat to uptick in inflation or a flat to uptick in the unemployment numbers going into the next non-farm, if that comes in looking a little bit weak as well, the market's going to continue to rally on bad jobs data through the year as shorts cover for profit, and you get a little window dressing as the market does retrace. So if earnings are okay and we don't find lower lows, the market will squeeze through a quarter, maybe two, and then we're still bearish. So I wouldn't keep it. I wouldn't be too, myself personally, eager to bet that we do break out and go higher highs, and that we are either sandwiched between here and here or here and here over the course of the next 2 quarters. And so is it a tortuous move to the upside? Likely. Is it going to look like this? Likely. Is it going to maybe be flat and then squeeze during earnings? Likely. The mechanism of getting there is not clean to see. The market is still very volatile, which means we have big swings, big candles. Listen for layoff data. So if a company announces layoffs, it's going to depend on how, kind of, if you remember Tesla, that was when we had that piece, right? Tesla announced layoffs here. The market took that knee-jerk sell, but then bad news is good news, right? So while you will have that, the 3 waves I was talking about is the perception is this. Immediate response to layoffs is almost always knee-jerk bearish, but short-term bullish. People bet on companies having more money with less overhead. So that perception is knee-jerk bearish, short-term bullish. Medium term, which I like to call quarter to quarter, typically bullish, and then long-term bearish. So companies are laying off because they're having problems, or usually at the base of their problems. So layoffs, like I said, bad, and knee-jerk, and then immediately good, right? So listen for that. Listen for that jobs data, and just watch. You'll see that there's choppy wave all the way up. I expect it to do basically this. Maybe a little bit of end of the year selling the last couple of weeks, but then the beginning of January to continue out. It'd be hard to see if we did break through some of these areas here. So by 44 and 43 would pour out those red lines in here. I might think we would limit, and then the market's going to be more aggressively bearish on the second wave down. So if we do get something like that, you'll see what a bear market power really feels like. This is the weakest bear market I've ever seen as far as trading goes. I remember trading through some of them years ago where I'd wake up in the morning and I'd feel like I was going to throw up. The market was selling so hard. Your positions would just turn your stomach in knots sometimes. I haven't really felt many days like that in this recession, so it's been okay. The trading's been, the volatility has not been over the top. It's been relatively controlled because the market is very liquid, which is also the reason why they're initiating QT now anyways, because the market can handle it. Like in 2008, it was nuts. I mean, if you were around for some of these days, this doesn't look like much, right? But the S&P falling like 10% a day, I mean like 1,100 to 1,000. That's the equivalent where we are now, the S&P falling 400 points in a day. I mean, we're up and down maybe 100, right? So just imagine waking up 36 became 32. That's the equivalent moves that we saw in 2009. Make you throw up when you wake up and the S&P's down 240 points, right? we haven't really had many days like that. Some of the bad days we've had, I mean, have been like, I don't know, like 2.5, 3, 4, 5%, maybe 5% being the worst one. Um, okay, I'm gonna call it quits in about 15 minutes, you guys. If you have any questions for me, and let me know. Yeah, but in general, like I said, I think market's pretty solid here. Maybe I'll go make another Babe Ruth tweet of bottoms in for the year. It's a very good thesis, so I think we'll be okay. Like I said, I'm taking a very strong bull stance. And then, so do you guys have any questions for me? Yeah, QQQ rejection on HP. Yep. Let's take a look really quick. And then I'll wrap up in about 15 minutes, and then we'll do maybe like a recap video later in the day or education video or something, and we'll release it. But make sure you guys do me a favor. Go down here. Check out our predicting profit targets. One of the best videos we've ever made, according to the guru. They love it. They said that this is where, when you do your risk and reward, right, on Rocket Scooter, you have the risk management side of things, right, where I put my stop losses and, okay. One second, you guys. All right, guys, we are going to wrap up and call in the morning. A little bit of things I'm going to do here. What I think about the rest of the day is just take a little recap on what we've seen. We do have a resistance at NASDAQ, so keep an eyeball on that. Today, the NASDAQ is the weaker of the sectors, but everything's still moving pretty high. If we get a 270 break on NASDAQ, that's pretty decent for all things to move higher, at least for the week, I think. We'd like to see where monthly is to see what that bull structure point is, but so far, watching the open support and 270 resist is that expectation. A 270 break to me is a key indication of a volatility crush going into the next couple of days. Don't have any data for UVXY, but keep an eyeball out on VIX in general. We do have, let me pull this up here. VIX is just volatile inside of this. Inside of this range, 30 to 33, it's not that aggressive for what we're expecting to see compared to what we've seen, especially in COVID and other recessions. VIX futures have been mild. 30, we haven't seen really large selling like we did 2008, 2009. And bear markets can get really bad once you pass 35, 40 on futures, 50. So it is contained. So we're not expecting 10, 15% jolts in the markets. Earnings coming up, so I don't think we're going to find lower lows until we pass through major earnings anyways for that potential. For the rest of the day, I think we are rational to the upside. The market could continue to fall. But VIX on the daily chart is, it's almost engulfing that candle. At least we're below the lows of the open on Friday. So remember, we did start collapsing volatility on Friday. Then you just had a call squeeze, right? They just squeezed out everybody on that expiration. So after that happened, the market is basically resuming like Friday didn't happen. So this is that takeoff points where we are lower lows than the open, which is always a decent sign if you're looking classically for support and resistance. We are even consolidating below lower lows, so I think we continue to go up today. As a matter of fact, I think we break through yesterday's highs and continue to trade there. So do your red lines, keep an eye on these. That non-farm catalyst we had 37.43, that is that red line to interact with. So if we break through that in support, it's nothing up higher but yellow lines. So watch that video that I published. We'll give you more information about yellow lines, of course. Our picking price targets is what I use to pick all my upper targets. These are those 4 techniques that always is how I look for my reward side for all the risk I do take. So let me go ahead and do one more candle here, and then I'm gonna get out of here. Okay. Do like I don't know where my tick charts are. And then we'll come in tomorrow and talk about the patch notes with the new Rocket Skier updates. So I'm super excited about that. I'm glad to share with you guys what we have, and then we'll just kind of chat. So yeah, and the market I think is going to continue to rally today, and I think it's going to break through highs of this week, 100%. So that is my call. Always should get out of here, LOL. I know, right? Geez, can't a boy enjoy his vacation? I'm just kidding. But yeah, take it pretty easy. If you watch volatility collapse, the market's not going to have a very hard time selling off when it's not volatile with no catalyst coming up. So keep an eye out on major earnings this week and next week. Right? We have big tech coming up. So there's one yellow line. Let's do a second one over here. Actually, no, that's the first one. Let's go back and do a second one. Yeah, so make sure you go and watch the video. I'm going to release probably another one later today as well. And then we'll call it a day. Let me get out of here. I'll give you guys these numbers for the yellow lines while I'm here, and then we'll go. Yellow lines is a very awesome technique that predicts very large pivots because there's a thing that happens there that is very repeatable, and of course that's what we like here. It's repeatable things. So we'll find the first resistance at these yellow lines for sure. Here she is. Found her. Those are easy to find. If you don't know how you did it, well, go to the rocketsphere.com website, sign up for that free trial, y'all. And while you're there, you can watch all the videos for free. As a matter of fact, it's like a 7-day free trial. I'll give you guys a hint. It's a cheat. Sign up. It's like full access for pass, right? And you just go watch all the videos. Like you can watch all our best content for free for 7 days. Super cool. And check out the platform while you're at it. I'll give you the link really quick. Go there and sign up free trial and jump in the Discord, humongous Discord that we have. One of the largest trading Discords, period. Oh, that like ratio is good. That's what I'm saying. Just go down and like that video. Let's get those numbers up. I'm being stern daddy this week. So if I'm gonna be editing videos for hours, and y'all click that button, y'all watch that video. If we're gonna chop up the content for y'all, then at least like go there and watch it. Okay, yellow line 1, yellow line 2. Let's see if we've crushed through some of these areas of resistance. So here they are. There's measure, and this is not the March contract, by the way. I need to really change these labels here. December contract, and I'll publish this, by the way, in Discord. I really need to go through and change all these labels. Some of them are wrong. So there you go. So the pivot today, 37.29, is also that same range. We are a rational upside, so market can do anything inside of here. It's not volatile enough, I think, to fall through the band like last. This is just an expiration mechanic, and the idea that we didn't test lower lows before highs. Oh, that's the last thing I'm going to share before I go. It's normally when you see large reversals, like when you see reversals, you don't normally see a candle on unless there's, again, I hate doing data like this because empirical data doesn't mean much, but very rarely do you see a 1 week reversal pivot like this without having another way before it goes. So a lot of times when you see the market really substantially reverse, you have like a 1 week where you don't go lower lows and another week where you don't go lower lows. Usually 2 candles in a row on weeklies. So you'll get that kind of like, 2 trading weeks is half of a trading month, and you just get that expiration mechanic where it usually just kind of bleeds out options twice in a row for your reverse. So 1 week down, another week down, at minimum, for you go. So when you have that red candle, like that single week flush and reversal, usually it's very low in terms of like lower than the last pivot low. And then you get that really sharp squeeze up. This could be what we get, but I'm just surprised we didn't find lower lows, and that could be just a testament to how good the market is. My call is that we have a 1 week up, 2 weeks down, and then we can rally. So either way, like something like this, just less volatile. Like I think we got like maybe 3 or 4, 5 days up, and then next week down, but we'll see. But if you just go back and look, I mean, you'll just see that the markets just tend to like really need to confirm bottoms before they, wick like that has another wick like that. I always like to, my favorite way to trade reversal is to see a candle like this and see a day like this, find lower lows, and I like to long right near the bottom to bet that we don't find lower lows. Just like that, just like that, just like that, just like that. I mean, it's very, very common to see that. So to see those V-shaped reversals, always scary to jump in, but knowing that if it does run, usually these are really sharp. So if we are getting a sharp reversal, which is that, you get 4 or 5 days up, it's higher highs every day. This is really bad at bleeding out of money options. So typically these are day trades. You will get dips to buy on the way up. So like swinging, see even here, dip, dip, dip. Swinging options, you're going to lose a lot, even though it's finding higher highs. If you're out of the money, you're going to lose a lot of theta on your long options. So selling puts is a really good type of trade in this environment to bet that we don't find lower lows. It's a very easy trade to exit because you have that particular setup. I'm not telling you guys this is not investment advice, but that's how I like to do it, to bet we don't go lower lows instead of buying call options for the shorter medium term. So keep an eyeball on that. But yeah, I do think we have an up week. Okay, love you guys. Click that like video on the way out, and we'll see y'all later. Adios.